Hello there, I'm Marinade. This is Boom Bust, and these are some of the stories that we're tracking for you today. We're talking about the Canadian dollar's recent tumble. It seems to have fallen and can't get back up, and we're going to look into why coming right up. Then the armored wolf himself, Mr. Jon Brynjolfsson, will be on the show today. He's sitting down with me to continue the whole Canada discussion. And in today's Big Deal, Edward Harris and I are joined by Boom Bust producer Bianca Fascini to talk about the demise of the PC and the rise of the smartphone. It all starts right now. Our lead story today, Canada. Now, Canada's currency has been falling in recent months, and in January, the Bank of Canada slashed its benchmark rate to 0.75%. But some are saying that it's not the Bank of Canada who should be blamed for the tumbling currency, but the economy itself. Now, Canada is a major oil exporter, and lower prices have meant a 3% decline in income for the country. Bank of Canada Governor Stephen Poloz told journalists at the G20 summit in Istanbul Wednesday, quote, "I honestly reject the notion that I'm taking down the dollar. It's not about what we did. It's about how the economy has behaved." Now, since Poloz was appointed in 2013, the economy has performed below the expectations of policymakers, even before oil prices started to decline. That's very important to point out. Now, the Canadian dollar has lost almost 18% against the U.S. dollar since Mr. Poloz became governor, and it's fallen 2.9% since he unexpectedly cut interest rates in January by 1%. Now, there are, of course, some positive effects for declining oil prices that they bring about. Certain things are like more money for consumers to spend, but Poloz said that the negative effects were immediate, whereas the positive ones emerge more gradually over a longer period of time. Real GDP growth for Canada was slated to come in at around 3% when oil was at $100 a barrel, but it's now looking at half that price. At $50 a barrel, the Canadian dollar looks like it would average closer to 75 cents for 2015, which means Canada is still very deep in the woods. To talk about commodities, we're joined now by Jon Brynjolfsson, CIO of Armored Wolf. Now, Jon, North American oil frackers aren't relenting on production, and I know that rig count is down, but output remains. In fact, there's actually a refracking trend, basically drilling a second time in the same location, and that's bearish for oil. But what does this mean for inflation and the real economy, especially in Canada?
Well, Aaron, just to focus in on that fracking discussion and the rig count discussion, I think what a lot of people miss is that the rig count is drilling of new wells. So you could have the rig count drop by 25% as it has, or 50% as it's projected, and that would still mean new wells are being created and produced. And we're seeing that in the figures. The oil production figures are going up. So the first, and I think the most important headline is that the rig count is not dropping fast enough to actually result in a reduction of oil supply in North America. We know that supply is not being reduced in foreign countries where there's social pressures to keep the oil revenues up. Saudi Arabia doesn't want to cut oil production. They don't want to be the swing producer. So we're seeing supply actually increase when we know that supply is already exceeding demand. Some people say by 400,000 barrels a day. I'd suggest it's probably more like 1 million barrels a day of extra oil flowing into inventories each day, and there's virtually no place left to store all that extra oil. So that's what we're seeing is price pressure on oil, and I would expect oil to go down further.
Now, according to McKinsey analysis, Canada, Australia, and a number of northern European countries now have larger household debt burdens than existed in the U.S. or the U.K. at the peak of the credit bubble. And I hear that bond yields in places like Canada and Australia have gone down. They have to go down, rather. So are you seeing convergence towards the zero lower bound here?
Yeah, well, so in Canada, for example, the oil sector is rather large, and because of provincial kind of cross-subsidization and other effects, the loss of revenues in the oil sector is really has impact all across Canada and all the provinces, mostly Calgary, Newfoundland, and so forth. But it's impacting all of Canada and slowing down and creating essentially larger fiscal problems at the provincial and central government levels. That's the case in Canada. We know that Europe already has a tenuous fiscal situation in terms of debt, which is being exacerbated by both Greece and Ukraine. China, likewise, is highly levered in the provincial guarantees, provincial debt in the real estate sector and some of their other levered speculative sectors. So yeah, we're seeing increased balance sheet size and less capital backing those balance sheets, which is another word for more leverage. We're dealing with a highly levered global economy.
Indeed, a lot going on. And you know, the overnight rate in Australia and New Zealand is still pretty high, and they've got a lot of room to cut. So how do you like assets in those locales, John?
Well, right now, I mean, it seems like that we're in the midst of a deflationary cycle and a bear market in commodities. That affects the commodity countries the most, Australia, Canada, New Zealand. You know, in particular, the slowdown in China is half the equation. From the point of view of the increased productivity of the shale wells, I guess that's kind of a microcosm or a micro portion of the whole bigger picture equation. The bigger problem globally right now just seems to be that there's still a lot of deadwood hanging over from 2008 and a headwind. There's the second machine age, which my brother's written about, that talks about how computers and innovation and robotics is transforming the way that the economy works, and that's obviously creating huge displacement. You know, not just in the laboring classes and in the third world, where now cheap third world labor is being replaced by highly complex robots back in Silicon Valley or Atlanta or other places in the U.S. So you're seeing problems in the labor markets globally, but it's also even now, you know, as journalists and other professionals know, impacting parts of the middle class and even segments of what you might think of as the upper class.
I was supposed to speak with your brother in Davos. We missed him, but hopefully we can have him on the show to talk about just that. It's very interesting stuff. But, you know, what about the currency impacts here? The Canadian dollar is now well under 80 U.S. cents, and the euro is at a 7-year low to the British pound, and we're seeing some big moves here. So what are you seeing in the currency markets that bears watching? Well,
I mean, part of the dichotomy we're seeing globally is that the U.S. seems to be the only engine of growth. Many would argue that the U.S. is not really growing rapidly or not growing much, but relative to the weakness we're seeing globally, the U.S. is kind of the odd man out, the least dirty shirt in the laundry basket, so to speak. And as far as currencies matter, that's very important, because the Fed is talking about raising rates. I don't think it'll happen in June. That's kind of the official target point for the Fed raising rates. But whether they raise in June or much later, as I expect, let's say, you know, early 2016, the Fed is literally talking about raising rates, while foreign central banks are talking about lowering rates, negative rates in Denmark and Switzerland and in Europe, Japan with 0 rates, and China lowering rates. So that is creating this currency dynamic, a currency war, if you like. For right now, U.S. policymakers, particularly those at the Fed, seem comfortable with the idea that they're going to try to normalize policy while the rest of the world is lowering rates, and that's creating a continuation of the recent trend we've seen in dollar strengthening, with virtually all other currencies weakening.
Let's move to equities for a second here, John. You know, profits as a percentage of GDP are well above the long-term mean, and trailing PE ratios are at 17.6 times earnings. So how bullish are you on returns at the market index level?
Well, I mean, this currency war will start to impact equities, and it'll do that in two ways. Obviously, equities don't love the idea of the Fed raising rates, but also the stronger dollar has translated into weaker overseas earnings for virtually all U.S. companies that have foreign subsidiaries. Theoretically, you might say that the weaker currencies abroad eventually will lead to recoveries in those foreign economies, and those recoveries could lead to higher revenues and higher earnings abroad for those U.S. subsidiaries, but those won't translate into higher profits anytime soon. So the profit picture looks troublesome for S&P 500 companies.
That was John Brynjolfsson, CIO of Armored Wolf. Time for a quick break, but stick around because when we return, Francis Coppola will be on the show to talk about Euroland. And in today's Big Deal, Edward Harrison and I are joined by the fabulous Boom Bust producer Bianca Fascini to talk tech. Plus, remember, you can see all segments featured in today's show on YouTube, youtube.com/boombustrt, and on Hulu at hulu.com/boom-bust. Now, as we go to break, here are a look at some of your closing numbers of the bell. Come on back with us. Welcome back to the show. Up now is my interview with Francis Coppola. Now, Francis is the associate editor at Pieria, blogger at Coppola Comment, and has 17 years of banking experience. I first asked Francis how the latest on the UK economy and housing market was doing ahead of the elections in May. Here's what she had to say.
Well, the economy's not looking too bad. It's slowing down a bit, and there's maybe some issues with the housing market in London. The hedge funds shorting it and saying it's going to collapse and the rest of it, which isn't going too well. But overall, it's been looking quite positive, really.
Well, that's good.
Which is good for the Conservatives, I guess.
Like starting off our interview on a positive note. Now, I understand a massive trade deficit has opened up for Britain despite the decline in the pound versus the U.S. dollar. So why is that, and what political ramifications will this have?
Well, to be honest, the trade deficit is largely to do with the Eurozone, not to do with the US. I mean, 50% of our exports go to the Eurozone, and rather more of our imports come from there. So when anything's going on in Europe, it always affects us. Realistically, that's a lot of what's happening with the US, with the UK's trade deficit, really. I don't think we should panic.
Now, a lot of people think a deal can get done, but if a deal doesn't get done, what would a Greek default or a Grexit mean for the rest of the periphery?
Well, I think a deal will eventually be done, basically because I don't think it's in anybody's interests that Greece leaves. We talk a lot about the effect on Greece, and it would be disastrous. It would be instant default because they would effectively have to introduce a new currency very fast. They would have to redenominate all their debts into the new currency, and that would be regarded as default. Either that or leave them in euros that they don't have. And then not be able to pay them because they didn't have enough euros, which would also be default. So however you look at it, it's bad news. It would be bad news for Greece, at least in the short term. There is the question over whether in the longer term it might be good for them. Sometimes countries that default and introduce new currencies do actually do quite well in the medium to longer term. So there is that question about whether it would be that disastrous for them looking further ahead. But certainly it's a short term hit would be horrible for a country that's already in deep recession. For the rest of the periphery, Varoufakis' view is that if Greece left, it would set a precedent that the others would be likely to follow. And I have to say that also appears to be Signor Draghi's view. If you look back at his speech made in Helsinki in November, he observed that the euro had to be irreversible in all its states. If one of them left, then it would set a precedent. It would cross a line that must not be crossed. And after that, others could leave. It would no longer be a single currency. It would be simply a hard currency peg. And I think that worry does need to be taken seriously. It does set a precedent. We do have before us what happened with the exchange rate mechanism, which unravelled very fast indeed after the UK left. So I do think it is possible that if Greece left, or worse, was forced out, that others might follow suit and the whole thing might unravel. That would be a risk.
That is concerning. So what would be the reaction to Greece's implosion from a policy perspective in terms of, aiding the periphery with QE or infrastructure stimulus or backloading austerity?
Well, I actually think that Greece's rebellion is sending a powerful message. It's basically burst the bubble that we've been living in for the last 3 years, which has been kind of cosy and comfortable, but it's all been based upon not saying what actually needed to be said and not saying what we knew at the time of the 2012 restructuring, which was that it wasn't enough, that the official sector was going to have to take a hit further down the road, that the terms and conditions of the bailout were not realistic, that the projections for Greece's growth were not realistic, that the primary surplus targets were not achievable, and that basically we were going to have to play this game all over again in a few years' time. And here we are 3 years down the road and we are playing this all over again, pretty much as we expected. What's needed, actually, is for Greece to be taken seriously, because in some respects what they're saying is quite sensible, which is that we know that this debt, as it stands, can't be paid back. We know that the terms and conditions that they've been forced to agree to in the past to enable them to pay it back prioritise debt repayment over growth, and that in itself is what makes the debt unpayable, because without growth they can't pay their debts. So what we need now is to change the narrative, to change the terms so that to prioritise growth over repayments, because once Greece can recover, then actually further down the road repayment of some of the debt certainly might be possible.
Now, it seems
I think we have an opportunity here, and not only for Greece.
It seems to me like a Grexit would mean speculation about other periphery exits from the euro. So doesn't the euro actually rise on speculation that Italy or Spain would leave the euro?
Yeah, that's an interesting question. Is Grexit bullish for the euro? Yeah, I guess so. It's very hard to predict. I mean, in a way, it should actually depress it, really. I mean, a currency that's about to experience a run on it kind of ought really to fall. But it depends whether people think that the core of the euro will hold together, and all that will happen is it'll shed its weakest members, which actually would make it a stronger currency. The more it shrinks, the eurozone shrinks down towards its core, the stronger we would expect the euro to be, really. So yes, in that respect, yes, it should make it rise. What it would do, though, is, and we've seen this already with Greek yields, is that we're seeing bond yields across the Eurozone generally falling, but of course Greek yields rising. And once as we saw in 2012, once other periphery countries start to join the will they, won't they speculation, then their bond yields would also rise.
That was Frances Coppola, Associate Editor at Pieria and blogger at Coppola Comment. It's Big Deal Time with Edward Harrison, and today we are joined by our positively lovely segment producer, Bianca Fascini, to talk about the one company that wants to do away with computers and says that smartphones will basically be your new computer. So I'm going to toss it over to Bianca now. Bianca, who is this company? What are they talking about? What are they saying? Do I really get rid of my laptop? Tell me.
So ARM Holdings, whose chip designs are found in 95% of smartphones, told Wired they believe we won't be using computers at all in the next 2 years, since smartphones can essentially take care of all of our personal and business-related tasks we rely on our PCs to do. Now, the computer has been around for a long time, but its true debut in society came in the 70s, when Apple and IBM came out with personal computers. 2 decades later, the internet was born, and our consumption of technology began to drastically change. In 1991, Apple came out with their first notebook called the PowerBook 100. It wasn't the first notebook created, but was less expensive and smaller than its predecessors. Since 2011, the demand for PCs have steadily declined, while the demand for smartphones has been increasing since 2010. Additionally, tablets began replacing the desire for notebooks, though larger-sized smartphones are now outpacing tablets. So, Ed and Aaron, do you guys remember buying your first PC?
I got to be honest, I was on my smartphone. No, I'm joking. No, that's a great question because, you know, I don't remember buying my first PC, but I know that my parents, when we got a PC, it was the first Apple. And it was one of those like old ancient ones. They're like, we got a computer, it's going to be huge, like you can do your schoolwork on it. And no one used it for about a year. We played this like one little game on it where you kind of like shot like little dots. I don't know if you remember that game, but that was it. And I believe what this study says. I think that smartphones will take over computers. I mean, do you remember your first computer? I do
remember my first computer. What I remember is that we got it as part of the package for the school when I first started. Every student in the school that I had, and we were a school that was very, very computer-centric. We all got computers right when we started school.
That's good. That's really, really, I mean, important. Ooh, look, I'm calling someone as I do this. And literally, it's funny because the idea that smartphones will take over, I think, is very real because you constantly have this in your hand. And I think the only thing that I miss from a smartphone, like why I still like my laptop, I'm done with my iPad. Again, I only use it to do yoga on. I mount it in the morning, but I just need the keyboard. And the fact that a smartphone is getting bigger, like if you look at the new iPhone, it's slightly bigger. If you could use, even not saying that I would get this, but if it was slightly bigger, kind of the size of your phone, you use an Android, that would be appropriate if you could just mount it, use your keypad, done. End of list of electronics necessary. Do you not agree?
I agree. Well, let's take a look at some of these, what we have here. So basically, I mean, this is when you think of the evolution that we've gone through in terms of computing. So in terms of recent computing, everything used to be this big. But really, this is actually the box. This is where the computer is, where the computer resides. And this stuff here, you know, the laptop, or rather the keyboard and the mouse, you could easily use that with this laptop. And this is like a more ancient laptop that's really big that you could have. So you could actually do the exact same thing using this keyboard and this mouse with this as you do with this, as you do with your device that you were just showing right there. Exactly. So the real question is what's the computing capability of that device?
Right. I mean, and you tell me, you're the tech savvy one. I just know how to turn it on and dial, and that took me a while to figure out. So could one day we just have like, doot, and then, you know, everything else go from there? Is that the whole...
Exactly. The time frame that they're talking about, 2 years,
that seems
obviously,
fast.
That seems way too fast to me. My general take on the whole thing is that really what we're talking about here is an evolution that's going to take much longer. People were talking about tablets in a big way before, but the reality is that tablets have not replaced PCs, and in fact, tablet sales are going down. And I don't think that they're going down just because of the fact that you know just because smartphones are taking part of the tablet sales. It's because you can't replace all of the functionality there.
I would agree with that, because I don't think that people dislike their tablets. I think they actually like them, and there's a purpose and a place for them in presentations. I know a lot of doctors' offices use them now because it's easy to go from place to place, have all of your information there. It's just a matter of computing power via the tablet. So listen, we all know the tablet sales are going down, but I don't think that it's intrinsically anything wrong with the tablet. It's just repurposing, what we currently have today.
Well, actually, we also have a picture of where we came from. Like, this is all the stuff that we're talking about just recently. But when you look right here, we have a picture of what a PC, a 5 megabyte hard drive looked like. And this isn't even the PC. This is just the hard drive. Look at that. You have to put this thing onto an airplane.
Is that
was in 1956. So when you think about where we've come from and where we're going, it's steadily going down in size to where we had, desktop computers and laptops. But the big key here is that now that we have the internet and we also have the cloud, we can now become mobile. So that, from my perspective, that's really where the rubber hits the road for what ARM is talking about, is that you can take your smartphone anywhere. You can take these devices a little bit less with you. You always have your smartphone with you.
It's really, truly amazing. And 5 megabytes, what is 5 megabytes in like everything now? Is that just...
I think that your phone probably has like 16 gigabytes, so it probably has, something like 3,000 times as much.
It's amazing.
And that's a tiny little phone compared to what we just saw there.
Yeah, they need a crane to get that thing into the airplane. It's fascinating stuff. Bianca, thank you as always. We love having you on the show, and we hope to have you on a lot more, get you incorporated every Thursday if we could do this. And Ed, your insight is invaluable as always, so thank you, thank you. That is all for now, but we love hearing from you, so please check out our Facebook page at facebook.com/BoomBustRT, and please tweet at us at Aaron Aid, at Edward NH. From all of us here at Boom Bust, thank you so much for watching, and we'll see you next time. Bye-bye.